Good morning, traders. It's 8 a.m. Chicago time on Monday, the 28th of July, 2025, the last week of July this week. Thanks for joining me this morning. A quick reminder that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm sure you heard yesterday the announcement that the US and EU had made an arrangement, a deal for um, tariffs, setting those at 15% across the board. The market gapped up, and we have been responsive selling ever since. We'll get into the details of that. Thanks for joining me here this morning. Okay, so here's what we've got in terms of where the market is right now. Our ranges and volumes were very high on the open yesterday, Sunday, 5 p.m. Chicago time, and they have since kind of retracted a fair bit. We see quite a bit of movement across the European indices. The DAX is at 191% of relative range, with the Euro Stocks 50 at 147%, but the US indices are pretty much in line except for the Dow at 111%. So that's where we are. We see crude popping pretty well today. 1.84% trading at 66.36 on the September contract, and the dollar also getting a lot of movement against the euro. Of course, those two are expected to respond. And then we have the crypto tokens also trading pretty actively. So that's what's hot today. The overall market sentiment is actually mixed. We have mixed to slightly bullish, really slightly risk on. This morning, as far as earnings, enterprise product partners was a key one. The rest of it is pretty small. Hartford Financial, and so on. This week we have the Fed, and we have a ton actually. There is quite a few earnings, big earnings this week, and again the Fed announcement. What's on the calendar? Let's just get through it so that you're prepared for the week. Not much today, but tomorrow we have U.S. JOLTS job openings at 9 Central, 10 Eastern, and then Wednesday we have GDP across Europe. France, Germany, Italy, Eurozone, GDP in the U.S. We have the Wednesday also the Fed rate decision at 2 p.m. Eastern, 2:30 conference, and then Bank of Japan also in the evening, Bank of Canada right before the U.S. Thursday we have consumer confidence out of Japan, inflation out of Europe, core PCE, which is a big one in the U.S., personal income and spending, as well as Keikshin manufacturing PMI out of China on Thursday evening. My time, Friday, we have the inflation rate flash out of the Eurozone on Friday morning. We have non-farm payrolls and unemployment on Friday, and then ISM manufacturing PMI also on Friday. That's really what's happening earnings-wise. You can look that up yourself. There's just quite a bit there. Okay, what are the themes today? Again, big week, and then we have the August 1st tariff deadline. That's going to be in the news a lot. EU, US out of the way. UK is going to be out of the way. EU to buy 750 billion in US energy and make 600 billion in investments. US and China are expected to extend trade truce by 90 days, with talks to begin Monday afternoon in Sweden. So China gets a pass for 90 days, even though this was moved from March to April to July to August. U.S. President Trump says he's very disappointed in Russian President Putin, and that he's reducing the 50 days he gave Putin. So that's that. I'm not going to cover that much longer. Let's jump right in the interest of tradition. If you recall, back in the day, I always went over what our plans were versus what actually happened. Here's the video. This is right out of YouTube of what was expected. Friday was really setting up as it had pushed against a key area and tested it overnight and rejected it, was opening below VWAP and below Thursday's POC. The expectation for Friday is it would test up, look for buyers, and then fall through. And the goal was it for to drop below 6,400, looking for 6,390 at least. It didn't do that. Friday instead played scenario 2, which is to pull back a little bit and then test up and push all the way into the 6430. That's what happened on Friday. I'm going to go over crude real quick and then we'll switch to the charts. Again, crude, same thing. Crude has been in a one-time framing up, and we talked in depth about why we're looking for crude to continue higher after a small pullback. I put this zone that you see there as the over-under, and then what ended up happening is crude ended up playing scenario 2 and just falling right through. Here are the charts. Let's start with the ES. ES right there. This is the zone that was. Oh, where is my? I lost my whiteboard. Let me just add that back in. All right. Up. Okay. Lost my whiteboard. Let's go to yellow. All right. So ES, we were here on Friday. We were looking for it to test up and fall down. It did not. It ended up pushing higher into 6430 and finishing quite strong. ES finishing with shifting the point of control higher. Acceptance moved higher. We left single prints down in the middle of the range, and we left another small distribution below. This is a pretty healthy rally on the ES. Not only did it rally, but it held into the close, almost like somebody was anticipating a deal this weekend. Gapped up overnight, opened up here. We pushed into this area. This zone here has about 4 measured move projections in it. This is expected to be a measured move confluence zone that's on our master levels. And I had warned the folks in the Convergent Discord that this is going to be a key area. It spans 64.52-ish to 64.57, and it ended up going to, excuse me one second. It ended up going to 64.57.75. What it has done since, I did not expect the gap zone to be filled. I did not expect it to come all the way back into the 64.31. I expected it to gap up and hold sideways overnight in a pretty aggressive range play. But what it has done is it has spiked up there, spiked again, and then ultimately ended up leaving an excess. And once it crossed the DGPs at that point, after the European, basically the European session had sellers coming in, and it was a pretty aggressive one-time framing down that got broken up in here just now, and we're holding sideways. So we're still in a gap, but it's a much smaller gap, and it puts us in a pretty tricky area. This zone here is completely untraded, unauctioned. The expectation here is that momentum, you want to stick with where momentum's going. Even though the one-time framing is higher, short term, I expect at least a test of the range of last week's range. So I expect it to drop back in and close the point of control. Okay, so again, leaving us in a pretty precarious situation here. If it does push back, you can see that the high on Friday was pretty blunt. There was no excess on Friday. Again, pretty bullish close, moving the point of control to the upper end of the range and holding settlement in that upper range. So we moved the point of control up with a weak high, with settlement higher, even if we didn't have the European news. The expectation, the normal, the statistical probability is that Sunday would cause a drift higher. And what we got was the news and the gap. So I would love to spend some time reviewing some of the setups. Actually, I think that would be very useful to the folks watching, reviewing some of the setups that came in on Friday, but really trying to squeeze a lot in here. Crude back through. Crude zone for today was actually right in here. Crude's over-under zone was right in here. Crude very, very bullish right now, breaking higher, resuming its upward draft. If you recall last week, I talked about how these lows indicate that crude is done. It's exhausted. We pushed into the key over-under. This is a big area, this over-under, where it says over-under here. This is a big area based on weeklies, monthlies, and dailies. And we poked, tried again, poked again. Big fight down here, lots of collisions, and we resolved to the upside. To me, this looked like from that day on, last week, last Tuesday, I think, from that day on, it just became obvious to me that it was very much a swing long for those who like to swing trade. So this morning, the resumption higher is really news driven. Mostly, given the way it acted on Friday, the expectation is we would be back. We'd be back and dealing with the balance zone right in here. The expectation is we would be stuck here, and we managed to push higher. And the open today is quite aggressive. So longs only so far in crude. Not much I can say there other than we transferred the point of control higher, pulled it back, and we are in this big balance zone, and here we are attacking the upper end of that range, looking for the 67.25 area as the next key test. Okay, that's crude. That's all I have for you. I want to keep this really short. I'm at home this morning, so I'm not able to stay much longer. Please remember to grab or to click on the links that are in the video's description. There's a video from last week about trading funded evaluation accounts, these quote-unquote prop accounts versus trading your own account. Pretty good AMA last week. I think there's a lot of valuable information in there. And of course, don't forget to click subscribe and set notifications, ft71.com/YouTube. Take care, everybody.